Hey traders, Raghee here. Happy Friday, everybody. Welcome to another episode of Charts and Coffee. Great to see everybody. Hope you've had a good week. I hope you've been considering the risk that all the economic hot zones of the just constant Federal Reserve members talking about one thing or the other. Hope you've been thinking about how that affects volatility. Clearly, this is an unusual week. So if it's been a challenging one, just remember, start with the calendar, know what the market's going to have to deal with, whether it likes it or not. And, next week's a new week. In fact, it's going to be a brand new month. And I'm really optimistic about April in terms of getting the rebalancing behind us, all this Fed chatter behind us. So pretty stoked going into the weekend. Let's kick things off with our questions here. Got a question from Patrick. Hey there, Patrick, who asks, let's see here. Could I please give a thought on Microsoft? Sure. Let's jump on over there. All right. So what do we have in Microsoft? What is the current? So let's go back to process, right? What's the underlying market trend? What environment are we in right now that is going to dictate what type of strategy, what type of indicators? If you're looking at option strategies, if a range-bound market is a very different set of strategies that I would deploy in a trending market. So this is a non-trending market. How do we know that? We use the tools that measure the 8, 13, 21, and 34 exponential moving averages. Tried and true stuff. Good old EMAs to understand what price is doing. And a little bit of volume analysis to realize that there's going to be some gravitational pull to that area around 232. Now, my thought on this is, of everything that I could look at in the equity markets. So we're starting at the granular level with Microsoft. What if I go up a notch to the XLK, right? Do I like the structure here any better? Well, if Microsoft's in a range and XLK is in a range, well, then I take that next step up to the index level. And I can see that the NAS is a hot mess. So what do I know about Microsoft? I don't like the index that it's in. I don't care for the heavily weighted sector that it's in via the XLK. And so it's hard to really want to do much in terms of put my capital in harm's way with Microsoft. So that's the process, gang. And that really is, by the way, the step by step mindset, almost like pouring all the information into a funnel and then coming out with the answer as everything gets sort of whittled down. That's the process that we do over at Sector Secrets. And I just kind of walked you through that on Microsoft, which is why it just wouldn't make the cut, quite literally. So keep an eye on it, though. I mean, those kind of markets can present different kinds of challenges, but you're going to deploy more of a choppy market, maybe an income collecting type approach to this until we get a little bit more clarity. But I wouldn't want to bet against Microsoft. I just don't want to treat it like a trend. So thank you for that. All right, Vish asks about Ford. So Vish, Ford's the name that we've been in Sector Secrets, and clearly it's something that we like in terms of a lesser weighted name in the XLY. In fact, this week today, I'll be doing a video for Countdown Trader, countdowntrader.com on Ford and GM, actually, about buying the dip, what it means to be in a double green market. And I'll be walking through that. So definitely keep your eye out for that update from the countdowntrader.com for Ford and GM. And yeah, I like these. I like these two. I like Ford. I like GM. They're in a sector that really, on the surface, looks like it doesn't have a lot of clarity. But again, when you understand the weightings, when you go through that process, index sector stock, you realize that XLY is sort of unfairly being influenced in terms of the perception by what's happening here in Amazon and Tesla, because there's plenty of stocks further down the list, lesser weighted, that look pretty darn good within the XLY. So that's where, again, kind of taking it down a notch into the granular level of the individual stocks, you're going to find some interesting names in that XLY, including Vish, Ford. Are we interested in that again? I'll be in the Sector Secrets room later on today, and we'll talk about some of the sectors that we are focused on. But I hope, Vish, at the same time, you're in that XLF trade, that was our most recent trade. That was a trade from this week. There are things that are working right now. Okay. Stay away from the meme stocks. Stay away from tech right now. But there are parts of the market that do have clarity. Clarity for me, that's usually going to be with a trend. All right. So good stuff. As always, you can visit more. You can learn more about what we're doing over at Simpler Trading at simplertrading.com, and the masteries at simplertrading.com/sector. All right, on to the next question. Hey there, Alex. How are you, friend? Thoughts on Google? Oh, that's going to take us into another index sector stock breakdown. Google, Facebook. Facebook's number one, then Google and Google. Heavily weighted stocks in this XLC. Hard to not like the XLC. If we're going to get specific about where there's opportunity in tech, it's pretty much in that XLC. But I would move past Facebook and I would move past Google. I think if you go down a little further in that communications ETF, you're going to find some better names. But if you wonder what the heck happened to XLC this week, look no further than the number one weighted stock in Facebook. This is that interwoven, this is that connection that exists between the heavily weighted stocks and these ETFs. So if Facebook's in this kind of mood, and of course we had the testimony, and typically these stocks sell off when Silicon Valley's, on Capitol Hill, I will pretty much fade, meaning buy these pullbacks based on the testimony that these CEOs have to give. Dorsey, Zucks, who else? Oh, yeah, Sunday Pinchar. They all testified this week. And especially with Facebook, I will tell you this. Look, whenever Zucks makes a misstep, it's nearly always a buying opportunity. Whenever they're paraded in front of Capitol Hill, it's nearly always a buying opportunity. So we know the timing, we know the catalyst, we know the hot zone that impacted this market. And normally my first instinct in these types of catalysts is to fade it. So thanks for the question. All right, let's see what we have here. Next up is, hey there, James. What is an episode of Charts and Coffee without my buddies Alex and James? All right, I know a lot of you are here morning in, morning out. And again, I appreciate for being part of that Charts and Coffee crew. All right, CTVA, James, well, it's moved out of the zone, right? I mean, you can see where it is pre-market. We're above the wave. We're above the 21 exponential. Gorgeous double green. Fantastic job on James. I got to tell you, I'm going to brag on you for a moment. So James is part of our Sector Secrets Mastery crew. It's a think tank of a few hundred of us that are sharing a process and a set of tools that allows us to scan the market and find relative outperformers. And this one wasn't even my pick. So James, I'm going to brag on you. You have, in such a short amount of time, really just wrapped your head around this concept, and you've been finding some great setups. So kudos, but you know that we don't want to be buying calls with that bullish momentum. So when was our opportunity? Double green, pull back into the wave. I would treat the 34 EMA on the high because the previous pullback had gone blue. I would treat this a little aggro. But let me mention something here about this pullback, gang. And this is something that not a lot of traders are taking advantage of, and it is something that we like to look at. After dividend dates, right? What do we tend to do after? It's not an always thing. Nothing's always. But what do we tend to do after dividend date? Pull back. Oftentimes by the amount of the dividend. So that pullback was probably a little bit more exaggerated because of the proximity to the dividend date. This one, clearly we don't have that issue, but I love the overall trend. So you might say, but Rog, what about this? I think a lot of that catalyst is that dividend date. So good eye, James. Really so impressed with just in such a short amount of time. We've only been doing the mastery for 3 months. So, I mean, you're finding markets like this, James, in that short of time. Kudos, because, most folks are struggling. And you're following the process. I could not be prouder. Anyways, I'll stop gushing over you, but I really am. In a lot of the questions, I know I see ADM. Hey there, Dr. Nutmeg. ADM, great question. What does ADM allow us to take advantage of? This is actually another sector secrets trade. ADM, Dr. Nutmeg, is a great setup that's tethered to, it might look ugly right now, but the confidence I have in the possibility of more upside is what's happening macroeconomically, what the effect has been on grains and soybeans, which we have long positions in, all my cards on the table. And really the fact that the 55 EMAs really quite been steady by way of these purple dots there. We do have some support just below the wave. But remember, even when the wave is broken, even when we get a red grab candle, that doesn't necessarily mean our long is no longer valid. It just means the trend has been broken. And we have to remember that a broken uptrend is actually distribution with a bullish bias. Most chop is a continuation. Think about triangle patterns, pennants. Chop typically is a continuation. So good stuff on that. Absolutely. And kudos on that one, Dr. Nutmeg. Hey there, Paul. How are you? All right. There's been a nice call buying in CCJ. Do I still like this one? Great question, Paul. I do. And you see, and Paul, I know you know this because we talk about this, but let me highlight for everybody else. Do you see that zone of volume that we're in? And we just bounced off that point of control at the 34 EMA low. So the 34 EMA low and the point of control just happened to have, intersected right there. I like the zone. I think in this case, that could be a minor low. So with that, I'd keep a really close eye on 1680 for a breach, but I think we might slop around here a little bit longer. So if you're wondering, Raghee, you interested in this one? How come we haven't pulled the trigger on it again like we did back in the beginning of March? I'm kind of looking for a similar setup where we sold off and we might spend another session or two before we move higher. So yeah, that's going to be on the radar, Paul. Great eye. Another one of our sector secret think tank folks. Great eye. But let's wait perhaps for an inside candle or a candle that's around the same zone as this one, and maybe a Monday or maybe later today type setup. So excellent. Diz, Francisco, this goes back to that XLC conversation. All right. Is Diz one of the names that we like going into that XLC overall uptrend? So let me show you something on the weighting. And if you might recall, I talked about being further down in terms of the weight for the individual stock. We talked about that with XLY. Diz is not super heavy weighted. I mean, clearly it's only about 4, as you can see there, 4.3%. When Facebook and Google headed down sharply, a lot of these names are going to go down with it. So not that I feel that Diz is no longer valid, but Diz is in many ways, I think, a victim of a couple things. Some of the weakness in Facebook, but let's also do something else. It's a really powerful tactic, which is where else is Diz weighted? Because we know it's just not an XLC thing, right? Where else is Diz weighted? Where else might there be some downward pressure on Diz? Consumer services. Okay, that's not a hugely traded ETF. Dow. All right, so I know that if the XLC is pulling back, and if the Dow is pulling back, that's going to put double weighting on Diz. So always be aware of the tide that boat is going to be affected by. But overall, I still like Diz. But let's also remember something else. Let's keep in mind that while it's choppy right now, we do need to shift our approach. We do need to shift our strategy. Doesn't mean that I don't want to buy. I do. But what it means is I need to change the strategy with which I'm going to enter from a trend following mindset to more of an overbought, oversold. So think a slow stochastic. Think, shorter term. One thing that can happen when a market goes into chop, and this is going to be something we're going to dive into in our next Sector Secrets Mastery session, which is how do we shorten the time frame on this once it's gone into chop to better confirm a reversal? So one thing that we might do, and I'll give you guys just a little sneak peek at it, and it's actually happening right now in the 15. We might want to look at it at the 1 hour. So you guys know that I'm a fan of pretty much all things old, if downright ancient in the markets. Charles Dow, Richard Schabacher, people that were writing and trading in the early 1900s. Heck, Charles Dow dates back into the late 1800s. Craziness, right? So one of the things that Charles Dow created was a funny little pattern. I don't know. He didn't tell me, but I don't know why it's credited to him, but I've always heard it credited to him, which is a neat little pattern called a 1, 2, 3. It's a reversal pattern. I like to also additionally, right, not supplant, but supplement the setup with proximity to my 34 EMA wave. So what we're looking for, let me grab my drawing tools here, because this is a neat little pattern. And gosh, I'll tell you what, this pattern was, I mean, clearly it's been around for over a century. And it's also a pattern that was super popular in the mid to late 80s. And it just sort of seems to be forgotten. And let me show you what it is. You need a lower low, you need a swing high, you need a retracement, and all that leads to ultimately a breakout. If my breakout can accompany the 34 EMA wave, which are these three moving averages, and there are some other criteria because it is a reversal pattern. Reversals are really, for me, only valid when we're breaking a previous trend. See, a lot of times, and this is a very common mistake, so it's kind of a newbie mistake. I made it once upon a time myself when I was using this pattern. Gosh, I was using this pattern when I was 16 years old. But one of the common mistakes that people make when they're using this Dow 1, 2, 3, it might be a Dow ABC 1, 2, 3. Like I said, you can call it a ham and cheese, but they tend to trade this in chop. The probability of this indicating this reversal is lower in chop. This goes back to what we're always talking about. If you don't have the environment right, just because a pattern appeared doesn't mean it's necessarily a high probability pattern. I hope that gets you guys looking for this cool little pattern in your trading. And that's where in something like DIS, it might be worth shortening the time frame now that it's in chop on the daily to find where that strength and that reversal may be. All right. Hope that helps, Francisco. Marvel. And if that's something, by the way, that you guys think that's pretty cool, Rog, gang, all of us are standing atop the shoulder of giants. And I love the fact that so much of what I do as a trader has been time tested to the tune of a century or more. I love that, and I think that when you look at a lot of approaches, they are different variations of things that were talked about before. I was just talking with my partner here in the office, and I was kind of chuckling to everyone talking about the Edwards and McGee book, when in fact it was either Edwards and McGee that was a nephew of Richard Schabacher. You want to talk about the classic technical analysis book that everything else is attempted to rewrite and not even as well. That's Schabacher's work, So go back to the roots of where these ideas came from, and you're going to find the gems there, not in the folks that have rewritten it necessarily. So that's my little plea to study the history of a lot of these techniques that we use. You're going to find those older stories are incredible. All right, MRVL. Hey there, Jose. Daily time frame. It's interesting. You have potentially a 1, 2, 3 here. Isn't that funny? That worked out really well. So if I can get a 1, 2, 3 accompanying a wave and a volume level, I think we're in really good shape. Let's keep an eye on this. It's not near that zone yet. I wouldn't even say the 200 EMA has been especially that. Well, I take that back. In fairness to this 200 EMA, we had earnings. So earnings are going to basically say technical analysis. What? 200 EMA, who? So we know that stuff gets pushed to the back burner when we have a fundamental event. So maybe this next visit could have a little bit more help, but I don't see a lot of volume there yet. We'll keep an eye. Maybe we'll keep up with this one, Jose, in the coming days going into next week. All right. Can we do the Russell? Sure. So the Russell is unique amongst the indices. And here is why. The Russell is not a high concentrated weighted index, the way the S&P Dow and the NAS are. The Russell is 2,000 stocks, very much evenly weighted, and same thing applies at the sector level. So the Russell's more of an oversold buy than it would be a trend following buy. I don't want to short the Russell. This is more of an oversold buy. And I think we talked a little bit about this maybe yesterday, or I might have talked about this in the options room. I can't recall. but I do like it. I just don't like it better than some of the outperforming sectors. And I sure don't like it better than the Dow. So, gang, I think it was yesterday or the day before. If you go to the Simpler Trading YouTube channel and you check out the free videos that I do every night, one of the conversations, I believe it was the one that I did yesterday, was about what our alternatives are to other indices and sectors. And the Dow, XLI, IYT, these are XLF, which we're long in, XLE. There's some relative outperformers there. I don't necessarily feel bargain hunting for sort of battered sectors and stocks is what I want to do right now as a trader. So I want to find those relative outperformers, and that's still going to put me in blue chip, large cap, more so than small. So thanks for the question. All right, next up is, we're almost out of time here. Let's see here. Lack of direction in silver. Dave, you're right. I'm longer term bullish on silver, mostly the weekly. But yeah, I'll tell you, I'm much more interested in copper. Right? All metals are not created equal. I like copper better, platinum better. So silver's going to be a little wayward, but I do think it's going to be a better market to watch than gold because it's not going to be so heavily tied to, and that's not silver. Sorry, that's the ruble. It's heavily gold. I would steer clear of. Silver, I'm slightly more interested in, mostly in a weekly time frame. But gold, I would keep clear of right now because it's so tethered to real yields. All right. Okay, so let's see what else we have here. Love the Darvis story. Yeah, I mean, how can you not love that Darvis story, Ericon? He was a dancer, end of day trader. Yeah, amazing, right? Who was I just talking to? That whole left brain, right brain, having been a dancer, having realized that he was paid in stock that he just shoved in a drawer, realized later when he took it out that stock had appreciated and he was hooked. Amazing story. What amazing story. How I made $2 million in the stock market is a quick read. It's an inexpensive paperback. It's definitely one worth having on the shelf. Okay. All right. So gang, let me wrap it up here. I'm out of time. In fact, I ran over a little bit. I will see you all in the Sector Secrets room later on today. I'll see you all in the futures room for the close. And if you haven't checked out one of our simpler products or services, please do. And regardless, thanks for being part of the Charts and Coffee crew, gang. Really appreciate the time. It is now a podcast, by the way. So if you want to check out Charts and Coffee, audio podcast available on iTunes. Have a great weekend, everybody. Be good to each other.